XRP price was already on the back foot at the beginning of last week, even before Bitcoin tanked over the weekend, and the flash crash only accelerated the correction in XRP price action. As losses mount towards 25%, investors are starting to look for being part of the price action as the discount becomes very attractive. The correction may still have some room to go, but the buyers stand ready to step in at 70 cents or 62 cents for a fade-in trade and run price back up towards $1.05. XRP price got rejected last week at $1.05 and saw bears taking the overhand, running price action below the 200-day simple moving average, which already labeled XRP price action as bearish and in a downtrend. The move over the weekend with BTC only accelerated that move and moved forward the price target of 78 cents with the monthly S1 support level. With that acceleration, the relative strength index overheated and traded in the oversold territory. Although XRP still looks heavy and has more room to go, a few key levels are starting to be put on the bulletin board of investors where XRP price action could see them stepping in and start buying everything in sight. One level is the blue descending trend line from mid-August, which has been very well respected and has already triggered a bounce-off throughout October. Expect the blue trend line to do the same again, this time around 70 cents. In case the bounce-off does not do the trick, expect the support between 62 to 58 cents to do the trick, as that last one falls in line with the monthly S2 and should attract more buyers, as the RSI will need to cool down and trade back towards the more average 50 level. If Bitcoin tanks further and keeps fueling the spillover effect that is acting as a headwind, expect a possible break below 52 cents, opening the door for another push towards 30 cents with the monthly S3 support level as the end of the line. Ripple offered new chance to argue for SEC documents on XRP, Ethereum, and Bitcoin. The SEC has claimed its internal documents, which include the agency's discussions over the nature of XRP and ETH, are protected by deliberative process privilege. Magistrate Judge Sarah Netburn has ordered both parties in the SEC v. Ripple lawsuit to review and supplement their arguments regarding the deliberative process privilege. For months, the Securities and Exchange Commission has refused to hand over documents regarding the agency's thoughts and discussions over XRP, ETH, BTC, on the grounds of being privileged information. In August 31st, and facing Ripple and co-defendants' motion to compel the SEC to deliver the information, Judge Sarah Netburn decided to perform an in-camera review of those documents. It seems, however, that a Second Circuit case has recently issued an opinion on deliberative process privilege that changed the law on what is protected by DPP. Judge Netburn is allowing the SEC and Ripple to rebrief for that reason. In light of this decision, by December 8, 2021, the parties shall simultaneously file letter briefs no longer than 3 pages to supplement their arguments so ordered. SEC documents may support Ripple's fair notice defense. The SEC has argued its internal documents, which include the agency's discussions over the nature of XRP and ETH, are protected by deliberative process privilege. The defendants have recently explained those documents will expose the agency's contradictions in its decision-making throughout the years, which proves the SEC didn't provide fair notice that XRP could be considered a security. William Hinman's deposition has already provided a general feel that regulatory clarity is something lacking in the SEC's communications. Jeremy Hogan, an attorney friendly with the XRP community, has pointed out 2 bombshells in that deposition that could strengthen the fair notice defense. There are also the Ripple Council's findings that may reveal the SEC lied to the court on Hinman's personal views. Firstly, the document could explicitly prove Hinman's speech was not merely a personal opinion, but the SEC's official policy. This has been a key issue in the lawsuit. The SEC sent an email to a third party telling them to analyze a digital asset using the factors in the Hinman speech, which speech was just his personal opinion. I understand now, It's the SEC that needs clarity, Attorney Jeremy Hogan commented, pointing out the agency's contradictions. Secondly, the guidance provided to the third party might also be relevant to show the SEC's inconsistency in terms of regulatory clarity. This can be used to support Ripple's fair notice defense, which claims the SEC failed to explain the firm and the broad digital asset space that XRP could be considered a security.